You know what's weird? Wall Street treats stock picking like a casino. Red or black, double down, hope for the best. But walk into a Jewish investment club, totally different energy. It's quiet, methodical, almost surgical, like they're examining each stock under a microscope before even thinking about buying. And I always wondered, what are they seeing that everyone else is missing? Because here's the thing, when you look at the numbers, Jewish investors consistently outperform the market average. Not by luck, not by insider trading, just by approaching the whole thing differently. It's like they're playing a completely different game with the same pieces. Growing up, I watched my grandfather analyze stocks with the same intensity he used to study Torah commentary. He'd spread financial statements across the dining table, circle things in red pen, make notes in the margins, argue with himself out loud about price-to-earnings ratios. And I remember thinking, this seems excessive for buying a few shares of whatever. But he'd say something that stuck with me. He'd say, buying a stock without understanding the company is like marrying someone you met 5 minutes ago. Technically possible, disaster likely. That mindset, that almost obsessive need to understand before acting, it runs deep. And it's not just about being careful, it's about survival instincts coded into culture over generations. So today, I want to show you 5 specific ways Jews choose stocks that are radically different from typical market behavior, and why these methods actually produce better long-term returns. Some of this comes from religious texts, some from historical necessity, some from watching too many relatives lose money and vowing never to repeat their mistakes. Let's get into it. Before we dive deeper, I'm curious, what city are you watching this from right now? Drop it in the comments because I love seeing where this community spans across the world, and honestly, it helps me understand what financial landscapes you're navigating. Alright, let's talk about something that sounds boring but absolutely prints money over time. Research over hype. Here's what usually happens. Someone sees a headline, Tesla up 40%, AI stocks exploding, whatever the hot thing is, and they buy immediately. Fear of missing out takes over. Logic exits stage left. But Jewish stock pickers, we approach it backwards. The more everyone's talking about something, the more skeptical we get. I had a cousin, Meyer, accountant, never wore matching socks, lived in the same apartment for 30 years. He told me once, when everyone's running towards something, I start walking the other way. Not because I'm smarter, but because crowds make bad decisions, and someone's always left holding the bag. That's not pessimism, it's pattern recognition. See, in Jewish tradition, there's this concept from Pirkei Avot, who is wise, he who learns from every person. Meaning you don't just follow the loudest voice. You study all voices, especially the quiet ones questioning the narrative. So when picking stocks, Jewish investors do something most people skip entirely. They read everything. Annual reports, footnotes, competitor filings, industry analysis, regulatory changes. My uncle Saul, before buying any stock, would literally call the company's customer service line, pretending to be a confused customer, just to see how they treated people. He'd say, if they're rude to a nobody, imagine how they treat shareholders. That's due diligence most investors never do. They're too busy watching some guy in a Lamborghini scream about the next 100x opportunity. But here's where it gets interesting. This research obsession isn't about finding perfect companies. It's about understanding risk so deeply that you know exactly what could go wrong before it does. Jewish investors aren't looking for home runs. They're looking for companies that probably won't bankrupt them. And if they grow, bonus. It's the opposite of gambling. It's calculated, almost paranoid preparation. And that preparation, that deep knowledge, it creates conviction. When the market crashes and everyone panics, the person who actually understands what they own doesn't sell. They buy more. Because they know the company's fundamentals didn't change, just the price. That's how wealth compounds. Let me tell you something most finance bros won't admit. Loving a stock is dangerous. Getting emotionally attached to a company, to a sector, to a strategy, it clouds judgment. And Jewish investors, we're trained from birth to question everything, even things we love. There's a Talmudic principle, elu velu, these and those, meaning multiple contradictory ideas can both hold truth. You have to examine all sides. So when evaluating stocks, there's this built-in skepticism, this refusal to fall in love. I watched my Aunt Miriam, sharp as a tack, sold a stock she'd held for 15 years because the CEO changed and she didn't like his tone in an earnings call. Everyone thought she was crazy. 6 months later, accounting scandal, stock dropped 60%. She shrugged and said, something felt off. I didn't need to know what. I just needed to not be there when it happened. That's emotional discipline. Most investors can't do that. They get attached. They bought at 50, it drops to 30. They hold because selling feels like admitting they were wrong. But Jewish training teaches you, admitting you're wrong is smart, staying wrong is stupid. There's no ego in exiting a bad position. In fact, there's a saying, cut your losses short, let your winners run. Sounds simple, but it's violating human nature. We want to prove we were right. We want the stock to come back. We want validation. Jewish investors want money, not validation. So they sell, they move on, they don't marry positions. And that flexibility, that willingness to pivot, it saves fortunes. Because the market doesn't care about your feelings. It doesn't reward loyalty. It rewards accuracy. And being accurately wrong, then quickly right, beats being proudly wrong forever. Now let's talk about something that sounds old-fashioned but absolutely demolishes modern portfolio theory. Concentrated conviction. Wait, didn't I just say diversification earlier in the culture? Yes, but here's the nuance. Jewish investors diversify across asset classes, but within stocks, they concentrate. They don't own 50 mediocre companies. They own 5 to 10 exceptional ones they understand completely. Warren Buffett, not Jewish, but definitely studied the playbook, said diversification is protection against ignorance. If you know what you're doing, you don't need 100 stocks. You need a few great ones. And Jewish investors take this seriously. I know a guy, Levi, portfolio of exactly 7 stocks, held some for over 20 years, beats the S&P 500 almost every year. His secret? He only buys what he calls sleep-well stocks. Companies so boring, so stable, so well understood that he never worries. Utilities, consumer staples, companies that sell things people need even during recessions. No tech hype, no meme stocks, no excitement. Just quiet compounding. Because here's what most people don't realize. Excitement costs money. Every time you trade, fees, taxes, mistakes. But buying quality and holding, that's where generational wealth comes from. And Jewish families think generationally. They're not building portfolios for next year. They're building for grandchildren who aren't born yet. That changes everything. You stop chasing quick wins. You start asking, will this company exist in 30 years? Will it still be relevant? Will it still pay dividends? Those questions filter out 95% of options, leaving only the truly durable. And durable beats flashy every single time over long horizons. Here's something that'll sound strange, but it's statistically proven. Jewish investors wait longer to buy. Not because they're indecisive, because they're hunting for value. Real value, not hype. There's this concept in Jewish thought. Savlanut, patience as a virtue. Waiting for the right moment rather than forcing action. And in stock picking, this translates to price discipline. Most investors see a good company and buy immediately at whatever price. Jewish investors see a good company, put it on a watch list, and wait, sometimes years, for the right price. My grandfather had a notebook, handwritten, full of companies he wanted to own, next to each one, the price he'd pay. He'd check quarterly. Most of the time, nothing. But occasionally, market crash, sector rotation, temporary bad news, the price would hit his number, and he'd buy aggressively. He called it shopping with a list. You don't go to the grocery store and buy whatever's at eye level. You buy what's on sale that you actually need. Same with stocks. And this patience, this refusal to chase, it prevents the biggest wealth destroyer in investing, buying high. Because when you buy high, you're starting from a disadvantage. You need the company to grow just to break even. But when you buy low, even modest growth creates significant returns. It's math, not magic. The challenge is emotional. Waiting feels like missing out. Watching a stock rise without you, it stings. But Jewish investors are comfortable with that sting. They've been taught, better to miss an opportunity than to lose capital. Because capital is finite, opportunities are infinite. Protect the capital. Wait for the next one. All right, let's bring this home like a perfectly braided challah. Intentional, layered, meant to be shared. What makes Jewish stock picking different isn't some secret algorithm or Wall Street connections. It's mindset forged over thousands of years of having to be smarter with less, of turning limitations into advantages, of making every decision count because historically, bad decisions had catastrophic consequences. Jewish investors research obsessively because ignorance is expensive. They avoid emotional attachment because ego is expensive. They concentrate in quality because mediocrity is expensive. They wait for value because impatience is expensive. Everything comes back to preservation first, growth second. And here's what's beautiful. This approach isn't genetic, it's learned. You can adopt these principles today. Read more, trade less, question hype, seek value, buy quality, hold forever. And maybe, just maybe, stop checking your portfolio every 5 minutes like it's going to dramatically change. It won't. Wealth builds slowly, then suddenly, but only if you let it. Now I want to hear from you, and I mean really hear from you. Drop a comment right now and tell me, what's one stock you're holding that you probably shouldn't be? The one you know deep down isn't working but you can't let go of. Right. Time to let go of. And then the ticker symbol. I'm reading every single one because that simple act of admitting it publicly, it breaks the spell. And when you're done with that, hit subscribe because you're not just joining a channel. You're joining a community of people who think differently about money, who refuse to follow the herd, who understand that real wealth isn't loud, it's quiet, patient, and strategic. The like button, yeah, that too, because it pushes this video to people who need to hear it. People stuck in the endless cycle of buying high and selling low, wondering why investing feels like punishment. You know what's coming next, right? I've been researching something that's going to make this video look tame. It involves a specific type of investor that almost nobody talks about. A group that's been quietly accumulating wealth using methods so counterintuitive they sound insane until you see the results. That video drops soon, and trust me, you'll want to be here when it does. See you then.